Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, February 14th, and a very happy Valentine's Day to all the ladies in the room. Hope you guys have an awesome day. Great to be with you guys. Kamal, Kelly's in the room, Kieran, Pete, Pooja, Tom, Ty, Ziad. Great to see you guys here this morning. So, man, I don't know how yesterday's webinar with Jamie went, guys, but I'm sure he may have reflected some of the frustrating sentiment on our end. Markets have just been ridiculous. Okay, it's our job to recognize when these conditions arise, when it's paramount for us to be a lot more stringent and a lot more meticulous with either standing on the sidelines altogether or just lowering our leverage in general on our trades, guys. Really, this is the market condition that tends to rip up accounts. So before we even get started on anything today, I do want to let you know that things are kind of foggy all around. So you want to be light on everything you get into. We do have a couple positions I'll talk about. Obviously, we've been talking about Kiwi and Aussie, the only ones that seem to be working right now. But in general, we just need to make sure that this time period, we're being very, a lot more, what's the word? A lot more nimble, okay? Just be a lot more nimble. Hey, Kieran, same to you, my dear. Happy Valentine's Day. And a quick side note, while we're on the matter, I don't think we're going to have an update out tonight. I will be getting engaged this weekend, so I have a lot of plans going on next 48 hours. So it won't be an update tonight. And on Monday, we do have here in the United States President's Day, guys. So it's going to be markets are closed. Again, if there's anything worth noting, we'll put something out. But just note that Monday, you'll probably see really thin liquidity conditions. So again, a time period where you want to kind of sit on the sidelines. That's exactly what happened to me this week. Account shredded within reason. Yeah, Robert, I don't blame you, man. Don't look at it too harshly. It's just we gotta recognize when these conditions are really starting to show the face and take a step back. Mohammed says congratulations. Pete says congratulations. Thanks, guys. I appreciate all the congratulations. It is an exciting time. Thanks, Kieran. Cheers. Okay, so with that out of the way, let's jump right into price action. Look, DXY Euro, man, listen, we're still in the weekly range. I'm not gonna lie to you. I took a long on Euro yesterday, just got stopped out. I was thinking about jumping to another long. I feel like I'm fighting the trade. And while they're really small positions, largely speaking, I still, I don't want to get caught doing the same thing over and over again. Here's the DXY, and here's the reason why I've been fostering that attitude. Although we try to tell you guys not to do that. Here's the reason. 97.20 is still the level that we're looking at. This is just a former gap from the November into December open. We filled it. It's been filled, but look at the pivots we got along those regions. That's 97.20. 97.14 is the 786 retracement of the decline, right? Slope resistance, we talked about this yesterday, also there. Look at this thing. I mean, here's the weekly opening range high. Here's the reversal. We thought this was going to break. We said 96.60 break would validate, right? This is weekly open support. If we get the breakdown, great. Let's look for 96.45, 96. It held, right? Ripped yesterday. Resistance held. Start to come off last night. Here, this is where you get chopped up. If you take a pistol to my head, again, I still, I don't want to be stubborn, but I still would favor this thing moving lower. It's just that we don't have the justification to keep trying that at this point. Okay, everything's still there. Momentum, yeah, we stripped above 60 a little bit, but not by much on the daily. You're at resistance. What do you do? What do you do? Here's the DXY levels from earlier in the week, right? No change. Here's support. We just highlighted the weekly open is the only thing that's on this chart. Okay, right here. 96.62 is the only thing we added. That held, went back into resistance. That held. Now we're coming. I mean, come on. Anything you take, guys, over the next 48 hours, 24 hours, into the close of the week, really nimble, in and out, in and out. It's not the levels to be sitting there in a trade thinking you got a really good entry for the longer term position. Although again, I just love the dollar failing up here, but it's got to show us some conviction in near-term price. So look, I have a near-term slope here. Yeah, we dribbled through a little bit, yesterday, but I just want to see some reaction. I want to see some reaction. Again, 96.62 break is the validation for the reversal on the near-term front. You're looking for the same downside targets. The only thing you need to adjust is that retracement to the high we made an overnight trade. Everything else stays the same. Any questions on the DXY or where we stand on this one? Thanks, Pooja. I appreciate that. Cheers. Big region. Still holding the initial weekly opening range on whole. Again, you guys seen the daily chart a million times. This is the only thing, I'm going to show you, and you've seen this a million times too, is the weekly chart. Look at that. Man, if we get one last stretch into 97.42, I don't know, maybe into the last day of the week or something, that would be awesome. And that's where I want to see failure. 97.82, 97.87, 97.42 is the major. This is like breakout zone. Above 97.87, you're looking for like 99, easy. But this is still resistance and former slope resistance. Last year's high week close. I mean, it's all stacked up here, guys. Former parallel from 2011, that same slope. Everything converges in this region. So you can see my hesitation. I can't get bullish dollar. I can't jump on the bandwagon with everyone. I'm just not there. At the same respect, man, near term, it just hasn't been the trade. So what do? This is where we need to be a lot more cautious. The last two daily candles on DXY are reversal signs. Anyway, one bearish, then a fat bullish engulfing. You see it all the time. You could say that, but one thing I would note about candlestick formations, Robert, is that where they happen also matters, not just the formation itself, right? So when we get an outside reversal candle to the upside into resistance, that's a bullish candle, but not when it's in that location, when it's at the upside of the trend, right here, for example. You had an outside day reversal to the upside when you're already at resistance. That's a bullish candle. Man, that was the high of the year. We dumped after that. You know what I mean? So when we get these outside reversal candles, like, this is not quite one, but if this one was at the low, that'd be great. But that same candle at the high screams reversal. So where these candle formations happen is, I think, the biggest pitfall with them. At this point, resistance is resistance. Nothing else matters to me. 97.42, 97.87. If we get into that region, I'm looking for exhaustion. Otherwise, I can't really do anything here. I can't really try to fight this aggressively here, unless near-term price action starts to break down. We see slope break, we see the median line break, specifically the opening range or the open of the week, which converges on the opening range low, 96.62. If that gives out, then I'm bored for a lot more of a bearish trade. All things held constant, we're still constructive above the median line, but we're at big resistance. This is a time to sit back, relax, and watch the action. He says that's where I meant bearish reversal exhaustion. Oh, okay, Robert, I misunderstood you. Yeah, I'm with you on that one. It seems to me more of an exhaustion trade. Yeah. But to be fair, Robert, I said the same thing here on Tuesday when we were turning. This looked like the exhaustion to me too. And to be fair, it was a great trade to take it to the short side, but it failed at the weekly open support. So here we are again. Yeah, there might be a trade in this, guys. If you're holding anything short, I don't want to shake you out. There might be a trade still to the downside, but don't get aggressive until we finally clear this godforsaken weekly opening range. It's just back and forth. So let me move on. That's DXY. Any questions on that? Do feel free, let me know. Number 2 from last night, Euro. So look at this thing. Man, it pissed me off so much. So here's the weekly opening range. Last night, as it was approaching this slope again, we were starting to break down. It looked like, it could be another opportunity to play that same range to the upside. Remember, we've been talking about 1267. That's been the level that we've been watching since last week, even if you go back to the updates, guys. That's where we grounded out. Here's Euro. Let me start this off by showing you one simple thing that will be paramount into the close of the week, and it's right here. This is the only thing I'm looking at for Euro, and that's going to be whether we close north or southbound of 113. Sound redundant? That's because it is. It's been the same thing we've been talking about since November. Okay? Hell, since October. It's all about 113. Every single attempt to probe below has failed on a closed basis. So, maybe again, maybe it's wishful thinking. Maybe my head's in the clouds right now. But for me, my ideal scenario is I don't care what happens from now until Friday, but I want to see this thing whisk up, sucker everyone back out, close above 113, and then next week we start to think about more of a constructive outlook. Right now, it's all about whether we're able to stabilize north or south of 13. That's it. Just market to close at 130, right? Right, Pooja? Wouldn't it be great if market closes at 113.00 and we're left again holding the bag, being like, what the heck do we do from here? I mean, look, it's just the market dynamics, guys, right now are difficult. You're seeing stocks move up, bonds prices move up, gold move up, dollar move up. It's like, what the heck is going on, right? Another week waiting, unfortunately, Pooja, but we don't pick and choose when the market makes its move. We just got to be aware of what to do when it does. So I'm looking for the close with great intent. I would love to see a North 113 close. Um, you know, I just here's the level of which intra week I still think we can drop, and that's 112 30, 112.33, the 100. So if this was just correction, right? Two equal legs. There's channel support there, a parallel that parallels from the highs that we made for the year. So it's some symmetry there, right? Just lower, you have the actual close low for 2018. That's 112.15. So you got a nice little range right there. I would have loved to see this drop here, right? We didn't get it. So again, yesterday, as we were approaching these lows, I thought I could try to take a stab against that low. I got stopped out for a real tight stop. There was an opportunity again last night to get long. If you're in that position, guys, 113, this is your first pivot. Take something off. Take something off. It's not worth it to sit in the trade. Go break even or better. If we get to pop through 113, I'll show you the near-term targets in just a moment. But boy, this thing is it's just chopping everyone up, guys. Here's an example of why these outside reversal candles. Here's the outside reversal candle that we highlighted on the 12th. Looked pretty convincing to me. Didn't really have much of support structure on the daily chart, but look at the intraday when we highlighted that report, right? We came right into that median line. We broke above descending channel resistance dating back to the monthly highs. And then we ripped right into that upper 50 line. It looked like an outside day reversal off support to me, right? Market had something else in mind. We slammed right lower. Again, that level did not hold. A stop against the low was a little too tight. Here's me getting stopped out again. And obviously, subsequently, here's the rebound again. So look, nimble is the name of the game. Weekly open resistance still 13.15. Resistance still 13.56. I need to stretch this to the new low. Excuse me on that. Oops. Okay, 13.50, let's call it. And then 13.80 is still going to be the breach that we need to validate the sort of the larger reversal, that upper parallel. Remember, we added this one this last week, this pitchfork. We said we don't know. But lo and behold, median line support, pretty much median line support. Here's weekly open resistance along that slope. If we get through this, look for a tag of the upper parallel. But again, as a disclaimer, guys, I'm not holding anything on Euro. I'm done with this for the week. I want to see how this is going to pan out. And the other thing that we want to keep in mind is, despite all the volatility that you're seeing on these moves, man, it's still within the weekly opening range. So we haven't gotten a reversal, we haven't gotten a breakout, we haven't gotten anything to give us that conviction. A little frustrating, but we got to wait for it. Yeah, Robert, it happens, man. Such is trading, my man. The main thing for us is that when we do have a week where price action is lackluster, really chopped, lack of clarity, the most important thing, Robert, is that you get into super defensive mode. Okay? It doesn't concern me when I hear that you guys have taken losses. It concerns me when the losses are sizable or it's impacting, your broader, performance. We want to make sure, guys, that every trade is based on proper risk tolerant measures. that you know what you're doing on as fact, you know what the risk is on every single trade. And if that's the case, Rob, we should never have a case where we have runaway losses. So brush yourself off. That's the name of the game in trading. Got a lot more opportunity to come. I can promise you that. All right, so euro. Any questions? If you get the final snap towards 1233, look for support. Otherwise, if we break the weekly opening range highs, you might finally get that reversal. As far as I'm concerned, I got stopped out of 2 longs on the euro this week, so I'm not going to necessarily try aggressively again from here. See what happens. Okay, sterling, number 3. Just a quick recap on sterling. Again, a high-risk trade, obviously based on the Brexit talks that have continued to work out, but the levels are actually ridiculously clear. So here's what we've been looking at. Here's the update from last night. If you recall, on the 11th, early in the week, we said the risk is still lower, but we're looking for possible exhaustion. The level to beat was weekly open resistance at 1240. Okay, bearish invalidation was 130, but 1240 was the first sort of major level. Look what happened. This thing ripped into a high of 2940. We ripped into a high of 2959, just above the weekly opening range highs. Quick reversal, move lower. Again, that left us yesterday saying it's pretty strong rejection. We're back at the lows. The risk is lower. The levels of interest for me are 2828 was the first level, but then you have confluence zone right here. I think this is like 2790s, I said. And then this is the big zone, from 2735, 2755. I don't know if we get quite down there, but this is the first confluence region I wanted to see support. And that's basically what we're approaching right now. Okay, so the rejection, again, of the weekly opening range highs, weekly open resistance, the whole 9 yards takes us down here. This is the level I wanted to see hit. We haven't quite extended it into it yet. I don't know, guys. I don't want you to bail if you're holding this position. I still think we could get the extension into the U.S. Open, but the confluence region I gave you in the report was 2790. Okay, the low that we registered was like 2797. So what's there? You have basic slope, which is why I don't want to stress it too much, but you also have the broader median line or the upper parallel for that pitchfork that we broke out of, right? Multi-year pitchfork resistance. Whoops. Sorry, guys. This is from last year's highs. Pitchfork resistance, breakout. Check as support. You got a 50% retrace there. Just lower, the bigger level or the major key support level, the bullish inval, if you will, for the broader trade here in sterling. Still going to be 27.35, 27.54. That's the yearly open and the 618 of this year's range. Ideally, we don't even get down there. But we need to see, support start to hold here. So another one where there's no trade imminent, but I do think it's something we should be paying attention to into the close of this week, start of next week, for some stronger basing possibility here in sterling. I have been out of the European currencies for 2 weeks. It's really unclear, says Marco. Yeah, Marco, I don't blame you. The best trades that have worked for us this week, guys, have been Aussie dollar, interestingly enough, after that huge spill, which we did not like last week. There was a nice opportunity there. And Kiwi, we'll go over both of those next. Both those levels worked really well. Any questions here on sterling? So again, just to give you the bigger picture, sterling weekly chart. This is why we're watching this weekly close with intent here. He says, yeah, they've been super cool all this year. Kiwi especially. Robert, I agree with you. Although I'm not going to lie, Aussie, the spill that we got in Aussie was bigger than I expected. Remember early in the year? That one kind of teed me off a little bit. But lately, price action has been pretty convincing. So let's jump into that now. What worked this week? Aussie and Kiwi. Here's number 4. I have that under my list of what worked. Here's Aussie. But before we do, I just want to show you the weekly charts for Aussie and Kiwi. Both are pretty daunting. This is kind of the problem why I was really skittish. Remember this? We thought this was a breakout of the multi-year downtrend that we've been in. We noted that a parallel extending off the highs from December actually did hold as resistance on a closed basis. You see that? So that whipped right back below. And that put me on the sidelines. I had no clue what to do. Momentum failed right at 50. Again, that's not what you want to see in a bullish trend. And, I kind of threw my hands up on Aussie. I didn't know what to do from this point. Now, what happened is that near-term price action gave us some clarity. It wasn't even on the daily chart. Here's the daily chart. And here's what Aussie looked like last night. I'll come to that in a moment. So we were looking at this pitchfork, right? The only thing, again, here that looked interesting was 72.75. We talked about that region for a while. It was the 38.2 of last year's range. It was the 50 line, that slope that we added early in the year. And you had the 200-day moving average, okay? The turn from here, what threw me off was the break here. Like the perfect trade, in my opinion, would have been nice pullback, median line support for the pitchfork, the low week reversal close for the year. All of that converges right there. Would have been a nice hold. It cracked below, and that's been resistance ever since. So what do you do on a trade like this? Well, the only thing that looked really good on this one was the intraday chart. And here's what it looked like last night. Here's what, very simple. And I always tell you guys this, until we get a reversal one way or another off of a slope, right, a parallel or resistance, we don't really know if there's any merit to the slope of the pitchfork. So yesterday I added on there and said, look, I don't know if there's, if this slope is in play, but what I do know is a couple things. 70.85 is the weekly open, objective stuff, not Mike Boutros' opinion. This is where we opened the week. 70.85 is also the 618 retracement of the weekly range. That's not Mike Boutros' opinion. That's fact. And then if this slope is in play, well, that just puts some salt on top, right? Some sprinkles on top. That's also just below it. So if it's going to turn, hell, man, this would be the place for it to turn, right? So it was a nice rebound overnight. My long story short, first target 71.14, again, that weekly low week close. And that's basically the extent of it. Until you get the breach above the median line, there's really nothing else to do. Now, it looks like this could end up being a near-term consolidation. Love to see the top side breach, but again, we need to clear the median line to go for 71.46. The 100-day moving average somewhere around 71.64 at this point, and then 50 is 71.74. Okay, this is all contingent upon a 70.85 hold. If we break back below that, you're looking for 70.42. It's the yearly open. And the 618 line of the pitchfork, or excuse me, the 75% line of the pitchfork that we've been working with all week. Any questions on Aussie? Kieran says, yes, Aussie and Kiwi charts. You got it, Kieran, coming up. Nilesh says, Michael, are you going to go over dollar yen? Is there a bear flag on the daily? Nilesh, we can take a look at dollar yen if you want. I'm never a big fan of that pair, but as you request, ask and you shall receive, my friend. Nilesh, we'll take a look at dollar yen. Any questions here on Aussie? It's the only one besides Kiwi that I think has been the most operable as far as getting into play in. Last night's long was kind of it was kind of just like a freebie. But in fact, this rally here and failure against this high actually gave you some decent near-term triggers and price as well. So if you're holding on the short side, I wouldn't give that up either. I'd look for a little bit more of a deeper cut here into the US Open. But ultimately, if this low is in place, and remember, you got divergence into slope support, trigger break that gave out as well. Wouldn't be too surprised if we poke for another high here. But just remember that that's, the bearish dollar call, which has been not a winning call these last couple of days. Okay, so that's Aussie. Kiwi's next. Here's New Zealand dollar. Another one where you guys know heading into the RBNZ on Tuesday night, I told you what my thought process was on that. I was holding long into the release, really tight stop, just came like 3 pips within getting stopped out, and then I ripped higher. So is sort of my bigger winner this week. But I wouldn't get too excited still. It's just been a mess. Here is Kiwi on the weekly charts. Cool, coming off support. Cool, there's resistance. All right, cool. Turn here. former swing lows, decent pivot and price held to support. Here's failure at the 100-day moving, or this is the 52-week moving average. Like, what do you do here? Mid-range. Typically, when we have a weekly chart that's not putting us near support or resistance, I don't even bother. But it's the beauty of multi-time frame. The big level that highlighted on the daily chart, you guys remember what it was? 67 to 67.20. We talked about it for weeks. So you have the yearly open. The actual concerted yearly open comes in at 67.04. The swing highs from back here in September comes in at 67 mark. The 100-day moving average comes in at 67.20. The 618 retracement of the entire yearly range thus far, 67.21. So ever since the start of the week, we were saying, hey, let's look for a reaction to a drop of that region. Momentum's coming right into 40. If it's going to bounce, that's the spot to look for. So what did the intraday chart show us? Well, the biggest problem with the intraday chart is that we broke the formation that we were following. And guys, this is a new pitchfork we added. I want to show you how we add this in a second. I wanted to walk you through the setup. Here's what we were working with. We were working with this pitchfork off of the lows from January alone, right? Break of the lower parallel, turn this thing bearish. But then, as you made this low, higher low, secondary low this week, now the higher low is above the 30 level, and this is a pretty decent divergence signal. The weekly opening range came in again at 72.21, 72.20. So again, that major key region of support. And like I said in the webinar on Tuesday, guys, I just thought it was worth a stab. I mean, this is like a 15 pip stop, whatever. The first target was 67.70. So you had a decent play to the upside, 50 pip run. I got out the majority right here, so you didn't partake any of this part. But look, on the pullback, support at 68. If this is going to hold, big resistance still 68.70. Huge pivot in price, former 618 extension, former swing highs, former swing lows right there. If you're holding long exposure, these are where I'd fade out the rest of that. This is also where there's a risk, in my opinion, for a little bit of a pullback. Now, this formation, I want to scratch now. I want to leave this here just to show you guys that even when we break the lower parallel, these slopes can be beneficial, right? Because when we broke below this, you're basically bearish below this slope, looking to sell. Okay, this is big support. So maybe my target at that parallel was too early. But you know what? If this was going to be a test of former resistance, then a move lower, that's would have been where the failure should have been, and then a move lower. The fact that we broke above, now that slope held support is a tell. Okay, so at this point, I'm going to go ahead and drop this slope, and I'm going to go ahead and copy over the slope that we added from the daily chart. Takes into account a little bit more of near-term price action. Okay, and it puts us essentially at median line resistance, like right now. So the support level drops from here, and this is why I wanted to do this. See that former slope? We're going to go ahead and drop that to here, and that converges on the swing lows you made yesterday, 67.90. The progression of a setup, as it were, right? So if you get failure into 67.57 here, 68, 58.57, 68.70, this zone, okay? If we still get failure here, the risk on a pullback type of play is still for a drop all the way down to 67.90. It would still be constructive, okay? Any questions on Kiwi? It's the only thing that actually worked the best this week. And I was sitting in this trade literally for like 2 sessions, a session and a half before it even made the move. The RBNZ, whatever, people were saying they were dovish, but Kiwi ripped. So again, keep your eye on price, guys. It's all noise. Again, really close to getting stopped out there, but sometimes better to be lucky than skillful. Okay, so that's Kiwi. Numero 5. And by the way, as far as the Kiwi levels are concerned, here's what they look like from earlier in the week. So there's no change to any of these levels. except for that 618 here. 50%, 68.30. Oh, okay. We don't even have it on there. So yeah, all the levels are the same. The only thing that we're doing is we're stretching to the 618 at this point. So add the next subsequent retracements. Main key support still remains the same on Kiwi. Do expect you could see some failure up here, guys. So just be careful if you're holding anything on the long side there. All right. Let me hit dollar CAD real quick, and then we'll go into yen. I see a couple questions on yen. Rob, you have a question on that too? Yeah, we'll hit yen real quick. Dollar CAD's has been a no player for me either. Here's what it looks like. I mean, so let me take this. Let me take a step back. The thing with dollar CAD, the play for us in the week was for the move into 32.20. The break below 32.20 had me thinking that we were going to keep going. Remember, this was on the 12th, 2 days ago. We said it's coming into near-term support. I'm looking for a reaction there. If we're gonna break below there's really nothing until like 31.68. Okay. 32.97 was bearish invalidation. That was the hourly 2-hour outside reversal close that we made for the high, right? Or the reversal close wasn't outside. Excuse me. Was the hourly? Yeah, it was the hourly reversal level, and that converged on slope. So man, this is trading sometimes, guys. That key support zone broke, only lasted for a few hours. All of a sudden, you head into the European trade block the next day, boom, pops right back above it. And not only does it pop back above it, it slaps you in the face, comes back, tests at support, just to let you know, hey, you got washed out, period. It is support. And then here's the break to the upside. So again, on some of these turns, it pays to wait it out, to give patience to the trade, let price react at the levels we're looking for first. But again, a brief break and recovery back above this keeps us constructive. And here's the breach. I think the risk is still for that stretch up into 33.40. Here's dollar CAD in the daily. Right? We could go right back up into slope resistance. That's 33.40. I still would be looking for an opportunity or maybe the possibility of failure up here. But as it stands, I can't fight this just yet. Okay. And again, here's the intraday chart. So 2 out of 3 Kiwi commodity trades, not so bad, right? Aussie, Kiwi, still pretty decent. CAD, kind of getting on my nerves. So let's see how this pans out. Again, I think the risk is for a little bit more of a stretch higher. Objectively, guys, it looked to me like this was a break of the weekly opening range, which is what took us into support, right? Here's back above the weekly open. If we max the weekly highs, there's room. Kieran says dollar CAD, yes, the monster. I agree with you. Yeah, this has been an abomination trade this week too. But here's the thing with dollar CAD, Kieran, you always hear me make fun of dollar yen because that is the true abomination, in my humble opinion. But Kieran, dollar CAD does go into at times periods where it's clean. Price action's clean, the slope is clean, it's following some really nice, levels, things look kind of dandy. Then all of a sudden it starts doing wicked stuff like this. So yeah, wait it out. I think we get some clarity on this later on. Until we do, not interested. All right, number 8 or number 7, dollar yen. This is for Nilesh and Kieran. Pound yen. Okay, if we have time, we'll hit pound yen too. I do want to hit the commodities real quick, but we got time. So let's hit dollar yen here. Rob, want to take a look at that as well. Guys, tell me what you want to see on this. I don't track this as closely as the other majors, but I'll give you my 2 cents. Look at that. It's classic dollar yen. Just screw everyone. 618. Everyone's looking at the 618. Basic slope. Everyone's looking at basic slope. Everyone's looking for it to stretch in 200-day moving average. Doesn't quite make it, right? It's just the classical screw trade. The only thing that looks good is momentum turning. It's even above 70, man. Let me put this on a log scale and see if it's any cleaner. Weekly. Robert says, without data releases, what's the significance of an equal measured move and how do you play these technically? So, Robert, I don't know what you mean by its relation to data releases. Absolutely has nothing to do with data releases, but correctionary moves or a correction, which is opposite of trend, right? Or pullback is another way to say it. They're typically or oftentimes take the shape of two equal legs lower. So if the trend is higher, Rob, and it pulls back, that pullback oftentimes will be two equal legs. If the trend is lower and there's a rebound off support, that rebound will often be two equal legs, 100% extension off the low. So oftentimes, if you can identify two equal legs, that typically tells you that that direction is the correction, not the direction of the trend. Does that make sense, Robert? Good question. I hope that kind of clears it up a little bit. The 3rd of January, 23rd of January, the 1st February. Question, how to play them. Okay, say that again. January 3rd. On the daily chart, I'm assuming here? Okay. Okay. So that's going to change everything, Robert. So he's saying he's using the fibs based on the close. So here's the thing, Robert. That's a whole different type of analysis. Okay, if you're going to use the closes, we're going to be looking at different levels oftentimes. January, what was the other one? 23rd and February 1st. So using this. Yeah, I mean, if you're using, let me just bring it into a line chart. It would be easier if we do that. So if you do it in a line chart, okay, and that'll be easier to identify the high-low close. The 100% extension is actually right here. It's really interesting that you just pointed this out because I didn't even have that there. That's 90. That's 110.96. The problem. So you're getting to. I can get into a whole webinar just on this topic, Robert. But I just want to talk to you really about it really quick. The problem is this, man. If you're going to be looking and doing analysis off line charts, there's more power to you. I'm not against it per se. But it's very, very dangerous to take analysis like this and try to apply it to an intraday trading position or an intraday strategy because you're just looking at the close. So for me, the only thing that matters has to be a close, which means on these types of trades, your stop needs to be a close stop. If price closes the day below X, then stop. If price closes the day above Y, then stop. Because you can't let intraday price action filter into your decision making here. You'll get murked. I mean, you'll get absolutely massacred. So if you're doing that kind of analysis, you know, obviously here you just broke through resistance yesterday, you just broke through resistance here, you're pulling back. You just want to make sure that you keep that in mind. That's all I'll say on that. But to answer your question, Robert, if this is correctionary, so if this is just a correction A, B, C pattern, right? And this holds as resistance, then it would suggest that the broader trend, the broader trade is still to the downside. So on a move like this, if your opinion is of the fact that no, this is just, this is just a correction, then you're looking for that 100 for conviction. You're looking for reversals, you're looking for intraday divergence, you're looking for outside reversal candles, you're looking for something to suggest that that resistance level is going to hold. Does that make sense? That's where the measured move comes into play. Would you a possible bear flag, Michael? Could be. Yeah, could be. But here's the thing. I'm not a person who will be very big. My intent is not important. Nilesh, to be completely honest with you, to label this a bear flag or not. It's an ascending channel. You're coming off of uptrend resistance, right? My target, I'm a near-term guy. I don't play long-term trades, especially not in dollar yen. But for me, yeah, I'd be looking to play the downside. Now, let's say I kind of nailed a great entry at 1170 and I had to stop against the high. And all of a sudden the market's moving in my favor. Yeah, I'll chip a little bit off and I'll leave some on. But Nilesh, I won't target anything outside this channel. Okay, if we were to get into channel support, I'd be out of the trade. The whole thing with a bull flag is if it is a bull flag, then this is actually the great opportunity to take resumption of the trend all the way down. That's not me. Wrong guy, right? I'm not going to ever jump into a trade and wait for a break of uptrend support and go all the way into it. I'll be playing inside this range, maybe into support. Then if we break this, I'll be looking for the recovery, maybe to jump back into the short. But for a bull flag on a daily chart, I mean, for me, it's something to look at. It's not something that's operable because I'm much more near term. Nilesh, does that make sense? Just wanted to put some color on it. It could very well be a bull flag, man. I don't know. I agree that it's a near term, ascending channel formation. You're checking channel resistance now. So he says, perfect, right on, brother. So, take that for what it's worth. The only thing I would say is that if you drop, I just want to see if we do use the extremes. Wow, that's pretty sexy too. So Nilesh and Rob, do you see what just happened there? I didn't use your close basis, Robert, tactic, but what I did do is omit the swing low. And I don't really like to do this very often, but I've told you guys I've done this before. I did this all the time after the financial crisis, or actually, excuse me, after the SNB flash crash. I did this a lot after Brexit on the sterling crosses. You kind of omit the stretch emotional intraday low because it was made on low volume early in the year on a, building, headline risk, whatever. So if we just take the 100 off that, we get the same exact level, actually almost closer to the highs. The only reason I'm showing this, Rob, is because I've had experience in the past using, stressing only the closes for fib ratios and extensions. It can be misleading sometimes. So that's just my humble opinion. I like to use the spikes. If it's a major spike like this, okay, we can argue something different, but on a closed basis, sometimes can be tricky. Exactly, that's what I meant. Right on, Rob. Cheers, mate. So the only thing I want to show you here is also the intraday chart, guys. This is why I think there is some merit for the turn in dollar yen near term. So let me actually add that brilliant extension that Rob brought up here. Let's see if we can't put some color to this puppy. I'll leave that 618 for now. I want to see what this retracement looks like. Okay. Yeah, there's nothing for me here, guys. It does look like exhaustion. Momentum looks like exhaustion. This is the deepest cut in momentum, so sub 40 that you've gotten since the start of the month. Here's the breakout for the start of the month where we start at the lows. Every pullback in price has found support at or about 40. Okay, granting you a couple spikes here into 36. But this is the deepest cut you've got. So there's automatically a behavioral shift in momentum that is telling us there's something happening here. The level, sure, 111, big figure, 110, 100% extension that you found there. Rob adds further conviction to some sort of reaction here. You're getting that reaction. Is it a break of uptrend support that would warrant a move? That's what I'm trying to gauge. Uh, bear with me. Let me just try a couple more things here. Hmm. I'd actually be more inclined to work with. I'd be more inclined to work with this slope. Yeah. So this slope right here that I'm adding, guys, by the way, when you make the pitchfork a modified shift, it essentially takes the angle or the slope of the pitchfork and matches it to the basic slope of support off the two lows that you're using. So if you notice that channel that we were looking at prior to this, right? It's essentially the same slope of this. It's essentially the same slope of that. What it does is it matches that slope and then it allows us to put the bisectors in for us. And then we look to see if we get reaction at those bisectors, namely the median line. Might not have been so clean here, but once the reference point was made, was pretty clean. It's break, support, 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 support. 50 line, was it resistance on the upside or the 75% line? Looks like a little messy here, but resistance, once we got the breakthrough acceleration, upper parallel resistance, breakthrough acceleration, same thing on the breakdown. So it would suggest that this whole thing right here maybe a false break scenario for the near term, especially because you got divergence on that move with the trigger break and the momentum change and behavior, all that good stuff suggests you look lower. So the ideal scenario for us right now would be to get some sort of structure in near term price. So another peak trough or something to give us some slope to the downside. You know what I mean? To give this some color. I don't know. I don't know. There's nothing here yet to play with, but you look for some inflection points that'll give us something. I'd stay bearish below 1080. Let's just say that. How low exactly? Nilesh is saying how low. So what I would be looking for is for a break of the two regions of interest for me. And again, this is just snap analysis. Nilesh, I haven't traded this in months, and I'm not probably won't be, but just my opinion. I'd be looking for a break of these two. These are the levels that if it gives out, in my opinion, would suggest that you have made a near-term reversal in price. Basic slope support. Again, this is only a 2-point touch, so I have no way of validating that. And I tried taking a parallel. No touches on the parallel. There's no merits to the slope. So I don't want to put emphasis on that. But you have some clean inflection in price down there, 110.40. Then just lower, you have this inflection in price. Low, swing low, and that converges on that 75% line or upper 50 line, right? Which was resistance, resistance, resistance. A little messy there. So a break below this region is what would shift my attention for a larger move lower in dollar yen. Does that make sense, Nilesh? And for dollar yen, by the way, guys, the key thing I want to see here on a closed basis is really important. It's going to be, well, let me take one step back here. He says, "Yep, thanks, mate. You're more than welcome, Nilesh." I just want to see what the yearly open was. Oops. Okay. So the 2019 Open comes in at 109.68. What I want to see here, guys, is whether we resolve the week. It's like the euro in 113. For dollar yen, just do dollar yen in 110.20. Let's call it 110.30. If we close back below that 52-week moving average, 110.40, yeah, 110.33. It's the same exact level. If we close below this 52-week moving average and price is able to move below 110.33, the swing lows slope, I think that's the conviction for the reversal. Okay, that's dollar yen. The abomination at work. Let's see. Hopefully this thing shows a turn. And again, on some of the Pete, I don't know if you're in the room today. You know the SPX levels that we've been looking at. Man, oh man, right? I just wanted to highlight that. And Jamie gave you guys a tweet yesterday about the fact that Dow making its 8th consecutive up day, such a rare occurrence. Here's the breakout in SPX. Here's that long-standing 200-week moving average that we talked about. Looks like today we're poised to make an outside day reversal back below that moving average. Price action essentially marking divergence on these last two highs. Risk is at risk. Oh, there he is. Peter says, Peter, I'm here. Hey, Pete, man, now we're talking about price action here, right, Pete? We're not talking about we're coming to a big resistance zone or like the levels that we were talking about all into the start of the year, you and I. These levels, and then on the intraday chart when we were talking about, I'm way too zoomed in here. Whoops. When we were talking about these levels, right? We're not talking that necessarily that we're coming into any major key inflection. Remember, the level that we were talking about is right here. My point is that to me, there price action saying there's something happening here as far as the possibility for a washout, for some risk. Here's price action on a 2-hour chart. It's 120, higher high, higher high, higher high. Again, don't take my word for anything. Close basis. Boom, 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 boom. Man, that's as bearish as an RSI signal that you're going to get. Okay, so clearly the risk is lower on near-term front based on price. Now, what I wanted to highlight to you here is the levels that we've been following. This pivot, man, we're checking it now as support. And that was 27.36 and 27.45, remember? If we push back below this, for me, that's a false break. That's exhaustion high. That's look lower in intraday, immediately or near term. Now, if we hold 27.39 here into the US trade session and this thing kind of like holds support, and specifically if we close above this region, then that whole idea is right out the window. Right, Pete? But as it stands right now, that's what momentum is telling me. That's what near-term price is telling me, at least on the SPX. Okay, so this is number 7. This was number 8, SPX. Number 9, pound yen. I forgot about pound yen for you. Who was that for? Peter says, okay, thanks. Cheers, mate. Yeah, I just wanted to give you an update on that. Every time I think about the SPX, you come to my mind, Pete. So I wanted to keep you updated. Kieran says, that was me. All right, Kieran, let's take a look at pound yen. You like playing with the dragon, as they call it, huh? Good old Widowmaker. Let's see what's going on here. Here's pound yen on the daily chart. You can see this is not obviously a chart that I get too wrapped up in. Hmm. So it's an interesting pair. For me, wow. Yeah, 140, 140 comes up like every single time is something important. It's a basic 38.2 retracement. It's 100% off the high. So it's two equal legs off this high is 140, 140 right on the mark, 141. Um, you have slope, that red slope is a sliding parallel off this high. It was the same exact gradient of the pitchfork that we were in for like all of last year until we broke out there and came back in. Um, and then you have channel support for the current downslope just lower. So I would open it up into like this 40 pip range of support here, 41.40 to 141. Um, but I'm just not that bearish pound, Kieran. That's my problem. The immediate threat to me looks lower, but I wouldn't want to get aggressive on it. You know what I mean? Because I'm looking for pound dollar to find some support. Lower also from here, but I'm looking for it to find some support. So this is what I'm looking at on the daily chart, right? And then those 100, that 38.2 all comes right here. Let me just delete all this nonsense. Don't need that, don't need that, don't need that. I mean, could be a bull flag. This thing could just come into support. It's breaking, look, it's breaking the weekly open and the weekly opening ranges on this move right here. So objective, aside from Mike Boutros' opinion or anyone, the initial immediate focus here, the risk heading to the US markets would be still lower. I'd be looking for a reaction down, essentially basically where we are now and just lower into this pocket right here where you have some slope and then you have longer term considerations. You know what? You also have that swing high from last December. Why don't we just go ahead and mark that up? It's like 140.87 on the low end of the things. Like here for support. That's the level I'll be watching. If that breaks, Kieran, sayonara. Sayonara. You're likely to see a lot more losses there. So hope that helps on pound yen. That is number 9. Real quick look. I am over on time, guys, but a real quick look at gold and oil. I just want to give you highlights on this. Look, gold levels, man, they're still pretty clean too. Did I give you an update on gold yesterday? Yes, I did. Here we go. So consolidation. You see this purple consolidation? It looked like it tried to make a false break yesterday and pushed into 13.18, and it's exactly where it failed. Guys, I mean, 13.18, 13.22 were the levels that we were looking to fade strength back early into the open of the week. If prices get into that region, that's where we want to see hold if we're heading lower for a move back towards 13.02 and 12.95. So, we got that failure yesterday. It turned right around, dropped right back into 13.02, and here we are back in consolidation. So it's the same exact trade that we've been looking at on the euro, sterling, all these trades that are still maintaining the weekly opening range, had an outside reversal here, followed by an outside reversal there. Watch this range break, guys. Broader picture constructive, still above 1290. If we get the drop, these are levels of interest for exhaustion. Long entries, 1322, still the region we need to clear to mark resumption. In that case, you're looking for that stretch towards 1342 and 1348. No change there. So you're still looking for a break of this near-term consolidation range in gold prices. If we wash out lower, expect some opportunity to get a better entry. As far as crude is concerned, the only thing I want to highlight here, guys, is again, those same levels continue to play out. Here's the setup. No change to any of that, the levels that we talked about early in the week. When this thing reversed back above resistance, our initial inclination, once we broke back above 53, was to look for failure near the yearly open, if not the upper parallel. And certainly the 618 and the 786, these got added, once we confirmed that bottom with the breakout. So we got the break through the median line, okay, of that downslope that's right here. Here's the top side pop. We took out the 2017 open. I was looking for an extension into 54.70s, maybe not even 76, but like um, we didn't quite get it. It was 67. And here's the turn to the downside. So look, long story short, I think the risk is for resumption here. If we stabilize below 53.80, the risk is for resumption for another move lower in crude prices. So just keep that in mind on that front. And again, even the momentum signature, right? Really nice hold, push into resistance. There's that trigger break to the downside. Overall, I do want to see crude actually mount a larger reversal to the upside. But near term, right, we've made a pretty decent stretch off the lows from last year, just a couple months ago in December. Really nice move. Here's a little bit of a pullback. I mean, maybe another washout lower. Ultimately, if we breach the top side here, 54.76, remember, it's a near-term bullish, bearish inval. If we get through this, 55, 53, and if not 58 would be the next upside target that you're looking for. Former swing lows from the 2018 opening range low. Okay, all right. That is a mouthful. I'm going to leave you there. Again, I don't believe there'll be an update, guys. If I have time, I'll squeeze one out tonight, but I do have lots to take care of. Thanks for everyone here who attended. Thank you so much, Robert, Jaya, Kieran. Thank you so much. Appreciate that. And sorry, Aussie P levels again. The Aussie levels. Oh, SNP. Yeah. I got you. Which one's the daily? So, man, right now you're looking at the 200-day moving average, which is still right here around 27.45 and 27.36. It looks like it's breaking, man. That's the pivot that we saw on the way up. That's the pivot on the way down, I think. And don't forget, yeah, this now constitutes an outside reversal off the highs on building divergence. So I'm of the mindset that you do correct a little bit lower here. Okay. Best of luck for your big day, my man. Thank you so much, Mohammed. I appreciate that. Kieran, cheers. Aurelian, Marco, better. It's going to be a long process, but slow improvement every day. Thank God. Every day above ground is a good day. Cheers, Marco. Guys, have a great weekend. I will see you on Tuesday. Remember, Monday is going to be President's Day here in the United States, so there won't be any webinar on Daily FX. We'll be right back here on SB on Tuesday morning, regular scheduled time. Till then, best of luck trading. Have a great weekend. Cheers.